Now, global markets are looking ahead to GDP data from China. Activity is mixed as investors also monitor the U.S. earnings season. Here at home, the JSE kicks off trade after ending weaker and the rand dropping to its lowest level in 4 weeks. FNB Investments' Chantal Marx speaks to us this morning. Good morning to you. Thank you so much for your time. What's driving global market activity today?
Well, you mentioned it in your introduction. I think that the data that we got out of China today, really a bit of a mixed bag. In my view, when I looked at it at first, I was actually quite excited about the data. GDP growth coming out ahead of expectations, retail sales exceptionally strong, and the unemployment rate dropping over there. And industrial production numbers came in line with expectations. If you look at it just kind of flat out, but when you kind of segment the detail, it does seem as if there was some weakness or pockets of weakness, at least in the manufacturing sector in China. Now, we know that the Chinese government is trying to drive a more consumption-led economy. So I think that the result that we got, or the results that we got this morning, is in line with what they would want to achieve. But weaker than expected industrial production, perhaps just a little bit of a red flag, and markets are still skittish, so reacting to that as well.
Yeah. And how's the rand performing along with emergent market currencies?
So the rand weakened overnight, but we have seen a bit of strength returning to the local currency. Most other commodity producing currencies are also stronger this morning. I think that emanates from the stronger than expected China GDP print. But then again, the concerns around industrial production, I think, is something that could make this apparent strength this morning a little bit more precarious.
And we know that South Africa is expecting the latest business confidence index from SARKI. What's anticipated in that space, given the impact of the rolling power outages?
So over the last 6 months, we've really seen the impact of load shedding as it intensified and as it relates to business confidence and consumer confidence generally. I think the 9 years preceding the last 6 months, it was almost something that was seen to have some sort of an end. And it was manageable because we were kind of hovering between stage 2 and stage 4. But the last few months have been really intense, basically oscillating between stage 4 and stage 6. And there you have a meaningful impact in the way that companies run their businesses. Obviously, if you think about just the normal course of business, it is hugely disruptive. But companies also have to start thinking about how they're going to get through this period. Are they going to invest a lot of capital in terms of investing in their self-generation capacity, or are they just going to keep on burning diesel at a massive cost? So all of this is weighing on business confidence, and I would expect a further deterioration, or at least it to remain at very weak levels when we see this print come out later today.
So looking at company news, Sun International's long-term objective to wholly own both SunWest International and SunSlots is said to have become slightly more complicated. Talk to us about that.
Yes, so over the last 6 months, we've seen Sun International increasing their stake in Grand Parade Investments. Now, Grand Parade used to own Burger King. They've exited food services, and they now only have these small gambling assets, which they effectively co-own and co-run with Sun International. So for Sun International, it makes sense to wholly own these assets. That's why they've been buying shares of Grand Parade in the market. But at the same time, another investor has been buying up Grand Parade shares to the extent that it triggered a mandatory offer. So that means that they had to make an offer to smaller shareholders. Some of that has been taken up. And it's just going to be, I think, a little bit more of a tough negotiation. And perhaps they'll have to eventually put something formal on the table at a level higher than what they thought they were going to pay when they started buying Grand Parade investment shares last year.
And very lastly, Chantal, Google saw a slide on reports that Samsung may choose Bing for its search. Give us details around that.
This is quite an interesting story. So Google actually pays manufacturers of phones to use Google as its default search engine. So they pay a huge amount of money to, for example, Apple and Samsung in order to, when you actually go onto your browser, you see Google search opening up. In return, Google benefits from the massive advertising revenue that is generated from people using the Google platform. Now, Samsung has said, well, we already have a good relationship with Microsoft on a number of other apps that are embedded on our phone, including Microsoft Office. So why wouldn't we go for the Bing search engine, which is a massive market share lagger, but has recently come into the news because of its association with ChatGPT. Its search functionality is now partly powered by ChatGPT, and we know that there's a lot of excitement around the fourth industrial revolution as it relates to alternative intelligence, and ChatGPT is at the forefront of that. So I think it's going to be an interesting one. I don't know if it will actually materialize, because I don't know if Microsoft is willing to actually pay as much money as Google is to have the privilege of having Bing as the default search engine on Samsung mobile devices.
Yeah, we'll have to wait and see. Thank you so much for your time, Chantal Marx, giving us a breakdown of the very latest in the markets and the world of business. Let's leave it there for now. Thank you for your time.